Welcome to the deep dive. Today we're zeroing in on Lyft. Lots of buzz recently around the ride-sharing company.
Yeah, things have been moving.
We've got an Investopedia article here talking about some, well, pretty significant financial moves and a big jump in their stock price.
Right.
So our mission today basically is to unpack why. Why did Lyft's stock surge like that? What's really going on?
Mhm.
We'll look at, their Q1 gross bookings beating estimates. That's the total money from rides before costs.
Right, the top line number for rides.
Exactly. And a much bigger stock buyback program, plus what analysts are saying. Okay, let's get into it.
It's interesting because it feels like a confluence of things, several positive signals hitting all at once.
That's what the Investopedia piece seems to suggest. It all kicks off with their Q1 2025 performance, right?
Yeah, those first quarter numbers set the stage.
Okay, so the figures. They reported $1.45 billion in revenue. That's up 14% from last year, which sounds pretty good.
It is solid growth year over year.
But it was actually slightly under what analysts predicted. They expected $1.47 billion.
Just a little shy, yeah. But that wasn't the main story, I think.
Right, because the gross bookings number came in strong, $4.16 billion. And that was better than expected.
Exactly. That suggests demand is healthy. People are booking rides.
And earnings per share, the profit per share basically, also beat forecasts. Came in at a penny.
So even if revenue was slightly off, exceeding on gross bookings and EPS, well, those are pretty key positives for investors.
Strength, right? Like they're managing things well.
Yeah, potentially better cost management or efficiency if the profit per share is looking better despite slightly lower revenue than forecast. Boosts confidence.
Okay, speaking of boosting confidence, let's talk about the stock buyback. That seemed like a really big piece of news.
Huge news. They announced a new plan, $750 million.
And they're planning to use a big chunk of that, like $500 million, pretty quickly within the next year.
That's the plan, which is quite aggressive.
So for anyone listening who isn't sure, can you quickly break down what a stock buyback actually is and why it usually makes the stock price go up?
Sure. So basically, the company uses its own money, its cash reserves, to buy its own shares back from the open market.
Right.
Think of it like this. The company is a pie. Buying back shares means they're reducing the number of slices out there.
Okay.
So with fewer shares or fewer slices, each remaining share represents a slightly bigger piece of the whole pie,
Yeah.
the company's value and its future earnings.
Got it. So each share becomes theoretically more valuable.
Exactly. It can increase demand for the remaining shares.
Yeah.
Plus, it often signals that the company itself thinks its stock is a good buy, maybe undervalued. They have confidence.
And that signal, combined with the positive results, well, the market reaction was pretty dramatic.
Oh, yeah.
The article says Lyft shares jumped over 23% on the Friday after the news. Hit $16.14, highest since December.
That's a massive jump. It really shows how much weight the market put on that combination, the decent results, beating on bookings and EPS, and this very large buyback commitment.
It's like a double dose of good news.
Absolutely. A real 1-2 punch. Good fundamentals meeting a shareholder-friendly financial move. And it seems the analysts agreed.
Yeah, let's talk about the analysts. Always interesting to see their take. Investopedia mentions UBS, Oppenheimer, JP Morgan, all raising their price targets for Lyft.
Right. And not by small amounts either. They each added $2 to their targets.
So UBS is now at $14, Oppenheimer at $17, and JP Morgan at $16.
And it wasn't just the numbers. JP Morgan's comments were interesting.
What did they say?
They mentioned being encouraged by some of Lyft's underlying progress, things like all-time highs across many metrics.
Okay, like what metric?
Faster arrival times, for one, and also the highest frequency riders in 5 years.
Okay, so not just financial stuff, but actual improvements in the service itself.
Exactly, which suggests this isn't just, a short-term boost from the buyback.
Yeah.
There might be real operational improvements happening.
That makes sense. Faster arrival times, more people riding frequently, that points to a better customer experience, which you need in that market.
Definitely. It hints at maybe fixing some of those pain points that riders have.
Now, there was another player involved here, wasn't there?
Sure.
An activist investor, Engine Capital.
Ah, yes, Engine Capital. They'd been pushing Lyft for changes.
Right. Activist investors often buy shares and then, actively campaign for strategic shifts or board changes to boost value. What happened with them?
Well, this is maybe one of the most interesting parts. After Lyft announced the buyback and apparently had some productive conversations with Engine Capital decided to stop their campaign. They actually revoked their nominees for Lyft's board.
Wow, really? So they basically said, okay, we like what you're doing now.
Pretty much. It's a huge turnaround. For an activist who was pushing hard for change to publicly back down like that, it's a strong signal.
A big vote of confidence, you could say, shows they think the buyback and maybe other plans are the right moves.
Precisely. It tells the rest of the market that even a critical voice is now satisfied with the direction. That adds another layer of positivity.
So things are looking up. What about the immediate future? Did Lyft give any forecast for the next quarter, Q2?
They did. They're expecting gross bookings between $4.41 billion and $4.57 billion.
And how does that stack up?
It's pretty much right in line with what analysts were already expecting. So no big surprises there, but it suggests stability, continued performance.
Okay. And wasn't there a comment from the CEO?
Yeah, David Risher told CNBC they hadn't seen anything to worry about with consumer behavior this year. Suggests they feel pretty confident about demand holding up.
Right. And it circles back to what JP Morgan said, doesn't it? Those underlying metrics improving.
Faster arrivals, more frequent riders.
It feels like all these pieces are fitting together. The financials, the buyback strategy, the analyst upgrades, the activist backing down, and maybe some real service improvements underpinning it all.
I think that's the key takeaway. It's not just one thing in isolation. It's a combination.
Right.
Better than expected results in key areas.
Right.
A clear plan to return value to shareholders via the buyback. And signs that the actual business, the rides themselves, might be getting better for customers. The market seems to like that whole package.
Okay, so let's quickly recap. Lyft beat expectations on gross bookings and earnings per share for Q1. That was big.
Check.
Then they announced a major boost to their stock buyback program,
Which acted as a major catalyst for the stock surge,
Over 23% jump. Then we saw analysts raising their price targets, pointing not just to the money stuff, but also those underlying service improvements.
Like the faster arrivals and more frequent riders.
Yep. And maybe the clincher and activist investor Engine Capital stopped their campaign, signaling they're happy with Lyft's direction now.
Yeah, that's a pretty compelling narrative when you put it all together.
So the aha moment here, maybe, is seeing how all these different elements, financial results, strategic moves like the buyback, external validation from analysts and even critics, how they all converge to paint a picture of renewed confidence.
Exactly. It's the synergy. It's not just a good quarter. It's not just a buyback. It's the combination that tells a stronger story about Lyft's health and its focus on shareholder value. And maybe, just maybe, on improving the core business too.
Right. So here's something for you, the listener, to chew on. How much do these kinds of strategic financial decisions, like a big stock buyback, really shape how the market perceives a company beyond the immediate price pop? How much is perception versus reality?
Good question.
And looking ahead, beyond the financials and the buybacks, what other fundamental things like competition, regulation, technology, driver relations, what do you think will be most crucial for Lyft to either keep this positive momentum going or maybe run into new headwinds down the road? Something to think about.